Okay, let's see here. This is the Australian dollar. I guess in general, just overnight, I look at what just happened tonight as short covering in the equity markets. Don't be surprised if we just go sideways today from where we open up at. If it's a zero-sum game, half the people got burnt last night, and they won't have enough powder left to play tomorrow, per se, or wager on what they think tomorrow's going to be. After Brexit, and the bookies got it wrong, even though I think Hillary's going to win, there's a popular vote, and then there's the electoral college. So sometimes presidents win with the popular vote, or they win the popular vote, but fail to win the electoral college. So I have to leave it at after last night, the people that got scorched won't have enough powder for tomorrow. So usually I call this short covering. It's usually a P formation. Prices go straight up and then look like a P or a flag. This is what I was looking for. Hard short covering rally. I'd like to see continuation. If you look at some of the prices, they still have some room to go on the upside, but we're still stuck in a channel. I mean, we're back above, we're back into the meaty area again. So basically, I'm looking at this, as I talked about over the weekend, that we get a little bit more of this to the upside, like on Tuesday or Wednesday. Tuesday might be just sideways, and then Wednesday. But a lot of people have been blown out of the water, and so their bias won't be here either. Usually when you get a large volatility day, it cleans up both sides, okay? But one day doesn't make a trend. Things don't change. We're going to just go through the whole, if things are quiet and sideways today, you're going to go through a lot of charts trying to find something. In my case, I'm just waiting for the opportunity of on the upside, looking for areas to short. I just think that after this, we go into the holiday season, and that has to develop. If it doesn't develop, you could basically watch Amazon. If it doesn't develop, then we're going to have issues, because retailing, which is 70% of our economy, this is when it happens. So the baby boomers, we're talking grandma and grandpa, what kind of gifts have they handed out last year? That kind of thing. So, they say the stock market is forward looking, so and if you take anything that's happened in the past as peaks, 2015, whatever, it's getting to be obvious now that the underlying market is weak. But like I said before, if we're going to take this thing higher, we're going to need a broad-based rally here. What we're looking for is a new sector to run. We ran the commodity sector, and then we got into technology, and we ran that, your Netflix and your Facebooks and things of that nature. So you could it's not as similar frothiness as in 2000. At 2000 was anything and everything. They whatever you tossed out there, they purchased. It was like selling a car in the mid 1980s. If you came on the lot, you were a buyer. You didn't come back a second time. So we'll get started here. All right. So overnight, obviously, you saw what happened when I did the videos. The FBI thing, whatever, but that's what the market was saying, right? Underneath, it's not that I look at it and say, okay, it's going to go from here to here. It's the odds of, there's a possibility, not a probability of being, the market can be susceptible to things. And what do we know now? We definitely know that we're going to get a lot of people that just turned bullish today. They may be Hillary supporters. They may be. It doesn't make any difference. This is one of those days that you need to be quick on the guns. The first guy I just watched here in Bloomberg talked about gold. If you're, he's talking about buying call options. I mean, so it's one of these things that today would probably be a really good day for you to go and do something else because of you're going to hear and see and talk about people. We'll just say we all don't have a clue, and they're going to be talking, and today is not the day to be listening to everyone, then, in my opinion. Basically, what will happen on the charts is what's going to happen on the charts. Like I said, I view this as short covering. I don't think this is a resumption of the trend to the upside. But with that said, there's certain levels to hit, and that's what we'll look at now. But I'll just run through the weekly futures right now. Australian dollar. Money flow is down here. It does have room to run higher, which would mean a weaker dollar, which in theory would be better for the equities, and a resumption of some commodities that are up at their highs now to resume on U.S. dollar weakness. That's what it is in theory, the whole if then else. You can see that here on the weekly, a little happy place, the Australian dollar is above it. This would, if you go long, you can use this as your stop, use one of these lower ones as your stop, that kind of thing. It does have a long setup. This does look like a pause before breaking higher. But if you, like I said, these are weeklies, so you have a sideways pattern here. Doesn't say that it doesn't poke its head through and come back in and fall. Remember, we have an election tomorrow, and then whatever people want to believe that day too. British pound, I like it on weakness. I'd rather wait for something to carry through on here before bottom fishing. It's still, even though I'm looking for 130s, you could test the 122 again. So it goes up 300, comes back down 300, and then goes up 1,000, that kind of thing, or 800. So I'm looking for to buy on weakness on the British pound. Same thing with the Canadian dollar. A little bit too long here on a bull, but this I'm trading the Canadian dollar long if oil looks like it's up this morning. The more that oil goes up and the Canadian dollar doesn't, that's going to be telling. That tells us back on the back end of things that oil's having issues. Euro, I'm still looking for areas to short. Was looking for the 111.80 area plus this area up in here to short the euro, because I'm now looking forward. I'm looking into April, May, and that of next year now. You know, what's the economy going to look like in the spring? Japanese yen, money flow never picked up for this amount of movement. They basically kind of gave up here. All right, if this comes lower, the U.S. yen goes higher, and that's what I'm looking for. So on any movement up here, I'm looking to accumulate long yen crosses, because I assume down the road here that the market will follow the path of an expansion in real estate, new building, and the economy will hum along in 2017. Here we have the Mexican peso. Like I said earlier, the Brexit deal. I looked at what the bookies had to say. That's the old behavioral finance. Didn't happen. Okay, so the Mexican peso. We've saw. How about this one? The swings you so far today that we've seen, you can see them tomorrow or on Wednesday, that kind of thing. All right, full reversals. What are there? You have to have follow through. So that's why you have to be quick on the gun here. When you have these sharp movements, it's usually short covering. What did Friday's S&P closed on the? Let's get to that, by the way. Crude oil sideways, you know that. Crude oil sideways, you know that. All right, dollar looks like it wants to run higher. The old relief rally. The world knows what our economic going forward. They know the cycles too. Cycles are everywhere. Okay, so this is last week. We're basically in the middle of it. All right. On the downside here, there's 2070. Okay. I mentioned 2080 and then 2040. You can march it down just like we traded in 20-point boxes above, 10-point boxes down. Now, like I said, on this coming through the lows of last week, it'll be a precipitous decline. Okay. So now you're talking 1920 on the S&P. On the upside, you go back to all the numbers I've thrown out there. 2120, 2110 today, 12 is basically it. So we're on the 10s there. So same thing for right now from as of, played at 2110, 2120. I think there's 2128 up there too. But all the numbers that I've passed out for the last couple of weeks, basically same thing. These are pivots and support and resistance levels. Okay, so you have basically a level of 2118. Here's a median lines. This is on a 2-hour chart. It hit the lower linear regression line for these last 20 days or so. So stopping points, what do you know? And then the median line here, and then the linear regression line, which is here at 18 to go along with this resistance level. Would I want to short it there? Well, that's close to the 2020. But what happens if we get 3 days of exactly like today? Because remember, I talked about prices at, it was at S2. When they go from S2, they can go to or to R2. Okay, so from S2 to R2, which basically was whipping through the upper side. So I don't want to walk in a short on this. I definitely know at some point this gap will get filled. Okay, the numbers we're hanging out at right here, they will be revisited again after the stock market doubles from here. If the cycle follows itself going forward for the next 8 years, the stock market should double. But in the meantime here, underlying weakness, caution, heed caution. We're stuck, right? We're basically back into the area. Those, in theory, this would be a retest. The 2020 area would be a retest. The bulls have to come through it. We know it. We know the bodies are sitting there, right? You also have to look at your situation too. Tax season, blah, blah, blah. Today is going to be a pretty good day for all the way around to actually read about it later. You can listen to what everybody has to say, but you can read about it later. But if you just know the logical spots. 2120, they're going to be sitting there. You're going to have people who are going to take a profit, who thinks this is going to run. Some people think that this is it. Okay. All right. What we were looking for last couple of weeks, a hard short recovery. They can come in here and force everything. All those $2 stocks, $3, $4 stocks that have been short since the 40s can get picked off. And so just be very careful here. Like I said, if you have something that the chart just looks awful, you're in the wrong sector. We'll just say healthcare. Anything, okay, you're looking for finance, banking, autos, insurance, and then on any hard weakness, you're looking for software and technology and stuff, things of that nature. The commodity cycle is basically over. Looking forward, even though things are soft now, we just get this out of the way and then we can move forward. So the numbers, all the numbers last week, the 2120, and then same thing on the way up. Yeah, let me do it this way here. I hope everyone had a wonderful weekend. I get to go for a ride here. Kind of time this. I get to go for an hour-long ride. Ride. All right. So basically here, these are linear regressions. This is a 4-hour chart. We're basically the median line at a number. We're approaching, we're close enough. Just like we saw on Friday, we came within 6 points of 2100. All right. So even though you draw your lines, it's going to be a little bit mushy for right now, because you have the humans and not the computers who are going to have to puke these up, right? Okay, so this is the lower 70% of this trade. So there's a lot of supply up here. Also remember that eventually here we'll be rolling out of these. So how about this one? Kevin, what are the odds that this is going to be the low until expiration? Well, I don't know. We'll say 50-50. No. But the thing is that you also have to remember about rolling over here into March. Think forward here. I know we have more weeks to go, but you have to think about that. If this contract, since it came to market here, where are we here? Okay, so here's June and September, and what do we have? Basically, the contract has been net short since it's come. All right. The money flow is gone, which is real interesting here. If I was a bully, say somebody handed me money and said, go bully something, I'd go bully this. You know, we know we're at 2120, so I don't buy anything all the way up to there. And then when you see it pull back, then I come in and bully this thing. What happens if all the people who come in and short at 2120, there are people that today that were long and it got up to 2120 and they will short it, because that's what we're told when we're connecting the dots. Everybody talked about 2120. We're within 10 or 12 points. So I talked about in the videos, calls would be cheap. I'm not interested in calls now. All right, but I would be interested in writing options per se, because you're gonna get the volatility to move into the calls. This is quite the interesting deal here with the money flow in this futures. It basically tells me all that was in here was long bias. Okay, you get down to here and you get this. And I'm seeing this on the money flow on the daily. All this does screams to me that this market is headed higher. You can come in there. It's what it's telling me is that there are no more bulls left in this thing. All right. So this could be the bears feeding on themselves too. But how I look at the money flow of all the years I've been looking at this stuff, this one is a huge sign here. If the market wants to go screaming higher on weak legs, is how I'm going to look at it. It can. Do I think it's going to go through the upside? Like I said, I wouldn't be surprised, because prices I have seen when they go to like S2 or R2, they go straight the other way. You know, we saw what the put call ratio, things of that nature. So what I'm more interested in is to see how it handles the 2020, because you just know technically that's where you're going to whack it, and then you start moving up again. Here's 28, and then we're into the 40s again. You know, there's some in the 30s, but you're only playing this little area here. You have a lot of people that started out this year. Okay, down here, what do you have? You have it up. They have a pullback. You cleaned out somebody. All right. I talked about going long in the beginning of the year here. You know, if mom and pa doesn't call me up and cash me out in my fund that I'm running or whatever, that kind of deal, I'm just sitting tight, right? End of the year rally, could it start right now? Sure, you betcha. But all I know is after a sharp move like this, typically you get for the rest of that day a sideways pattern. Okay, for short covering. But the market is susceptible, like I said, to just coming in here and bullying this thing, right? Because from what I see, there are no longs in there. And of course, these really don't help me either. Okay, but like I said, break it down. All the numbers that I wrote about for ES for the last 2 weeks, that's going to be your upside resistance. Focus on, you know, rolling over. What do we have for tomorrow? 20 more higher tomorrow. I talked about that, but it was supposed to be a lot more though. All right, what's this? 2136.38. Okay. This will be the next target I'm looking at here, is like 36.38 area. Okay. It's not places to short, but it's just places to watch. Okay. Because you have basically, like I said, everybody that came out of it, whoever is, you know, if you want a long here, you know, it hasn't worked out. So you're out of this thing, which also means that the ARBs and stuff, they're going to have to unload their equity, all the offsetting positions in the ARBing. So that will continue on too. So, you know, for these next 2 days, be careful. It can go anywhere to the upside for right now, but definitely I know that this downside is going to be sitting here for at least a couple of days because I'm getting what I was looking for. But the thing is I would recommend, okay, that you just focus on a couple of things futures wise and just play it out. You know, I mean, if you're eager, you have the money, you know, and you want to do something, just find something to occupy your time here. This isn't a mad scramble to get long overall because I don't see the money coming in here. All right, gold, talked about a bear flag on it. Okay, same thing. It's it's all inside week, which is mostly what happens every week. But on the inside week, the short side, the money flow wasn't there for how it moved. Basically, there was no interest. So it is susceptible to moving up because there was no interest, and it does have room to run. The pattern just looks horrible. You know, and this is a weekly. So you're back up to this area filled before you had to move down. You got back up here. You dropped down. You came back up to retest the loss, and now you're reversing. The first guy on TV says buy calls. You know, I'd be looking at gold would be at 50 before 1325. So 1250 before 1325 is how I'd look at that for right now. It's one of these things that in one day it's caused enough confusion in people who mentally watch all the markets in their head. Unprepared, that's the plan, right? Okay, what happens if the market takes off screaming? Well, if you have fat shorts out there, you may get picked off here. So just, you know, if you wrote something from 40 to 4, you know, I'd take it because it's computer and stuff. It just has to catch wind of it, right? I mean, we could have oddball stuff that runs for 45 minutes, 60 minutes, and then that's it. We've seen those stocks before. It's also $2 and then $3.50, and then 3 days later, it's all the way back the last 60, 80%. Copper, bugaboo. This is the weekly pattern. The same thing here. The money flow has room to run higher. It is susceptible to, it's basically, if you wanted to walk in and be along, you could do that because of, it's not that it's a crowded trade. Okay. But I'm more inclined to sell off any type of, I want to own copper and stuff down the road here when prices are depressed. Heating oil, basically, a lot of this oil looks like that it's bouncing off the upper lines. It's fallen through its little happy place. Multi-year sideways, at best for the bulls, you could say inverted head and shoulders. Remember, these are weekly charts. Here's one. Natural gas. We're back to natural gas. This is weekly. Money flow is still up here after the slaughter. Okay, so on the bullish side of stuff, this is where the risks come in. 2080. Okay. I really think we're going to come down here if the weather doesn't develop, right? So are you going to swallow 50 cents or 70 cents or 80 cents or something to just pick this off where you could wait? You could wait until the 90 on the flip side, right? You know, 10 cents here versus 50, 60, 70. And wouldn't you rather buy down here, say 2020? But this is a happy place. It has to be, for whatever reason, there's a lot of money flow. So this is susceptible of coming down lower. At best for the bulls is you have a weekly inverted head and shoulders. Basically, I have to, because of where it's at and its happy place, I have to stick with it. Longing lean. Remember this down here, 17-year low. It's a 17-year low. And then we're pulling back. This is basically the reaction of the downside. Is this high? Will this high be taken out before this low? I'm going to say yeah. So, you know, and the other thing too is oh no, it goes to an 18-year low. That would be awful. You know, don't do that to me again. You know, do not give me a second chance to screw this up. You know, but that's how other people would look at it too. And the longer the sideways, the more energy that is stored there during the accumulation phase. And we're going to see that over the next couple of years in commodities. We saw that for a couple of years in oil. Most of these are running off a W bottoms type deal, very few V bottoms. But natural gas is susceptible to a sell-off here. Here we go with the NASDAQ. Same thing. This was the low. We have a gap off of here. Usually, like I said, it's a P formation. You have a pole and then sideways. Up into this area, we'll say 48.20. Well, it did. This is the top. This is where 70% of the trade has happened in this with the data. Okay, so it basically opened on it. Okay. I'd say somewhere in the 90 to 47.90 to 48.10 is where I'd be looking for say tomorrow, per se, or Wednesday. That's what I'm shooting. I don't think that we're gonna on this to be mass. It would be a lot of volume right away, indiscriminately at any market. You know, just get me out. But usually that happens up above. Because what you have happen here is you have people who begin to short these areas, because some of these on a weekly basis we went below this once, and there's just enough here that most of the stuff I received this weekend from other people that was talking about this Friday it should cross, it'll cross, this is our cross, and it's like, okay, well now you're telling them that to be defensive. Well, it's probably not going to cross. That's what I do. I get all my email. It's a lot, thousands and thousands and thousands of emails, and it's like, okay, it's going to cross. So put up a box and say cross, smart box. Hey, look at everything that says crosses in there, just like with Trump. Anything with Trump. All right. Unsubscribed is your friend. Make a box with unsubscribed, because I guess spam has to have that on there. And so you're going to, what's in my case, maybe a third, somewhere around a third of the emails that have unsubscribed will end up in there. Forwards from Yahoo will get pinched too. So if you forward something like a newsletter or something to a friend, it will be sucked in there too. All right, so on the NASDAQ here, all right, you have your money flow. Okay, you can see how the money flow moved into, we had new bodies rolling in here. Okay, so this is September and October. So people walked into the rollover getting long, and they got chewed up on. Okay, so now we're going to get, no matter what, in theory, half the country will be happy tomorrow, the other half will be pissed, and that kind of thing. Whatever, that's been going on since the Civil War. Get used to it. So you get your relief rally on top of that. So basically tomorrow, I would like to see another move up here, and I'd like to see just another screamer on Wednesday. And then, of course, I'll reevaluate everything to see if you're going to want to see a whole bunch of issues join in on this. I think it's going to be sloppy. I always give it some time. When it when it goes sideways, you'll have lots of time. Because you need actually new bodies to jump in here. So for these folk, the low is going to be their stop. Okay, and they just because of the market setup, they can just blindly buy for the hell of it. Put your stop down here. Is basically how the guys on the floor would be doing it. Just run it, because it is susceptible to running. Those who have the options, who sold off the options, who sold off the put options, sold off the volatility. If you remember, on Wednesday, I dumped a VX futures, right? So I took it into the dragon, short the future 1 day early. Okay, but ka-ching today. So I would also like to buy volatility on some sort of screamer here too. Is this a one-day event? I don't think so. I think it's going to carry. You're going to have election, which could be a pause day and then a continuation, but it's going to be how it runs in here. And look at the psychology. I've been been doing this for a long time. Even today, I'm cautious. I'm cautious, well, because I know a whole bunch of people are going to buy everything, you know, and you have to see how that pans out, because we're basically stuck in a sideways area, you know, just like up in here. You know, it's all been a long sideways. We need some. It would be healthy to, for whatever reason, we'll call it profit taking, whatever they want to call it. Get something where it comes back, would set up the next leg higher is what we need. It's basically risk management. You know, you have to be very careful. I assume most of you are speculators, so you could give two shakes about next year. But, you know, if I come running in and say buy, and then looking for the end of the year, I've already gobbled up all of this, and I'm cautious now. You know, when you're back here saying, you know, you're looking for this at the end of the year, okay, and it's here, and then here shows up and you have to reevaluate everything. I would rather be a little more defensive up in here. For whatever reason, we're gonna learn a whole bunch of new words in the lexicon of, you know, whatever. But in the short run here, I would just run this stuff. You know, when they run up into resistance, up in the like 4760 area, things of that nature. I would, how about this one? I'd be the second mouse. I want to mess with people too. Just mess with them, you know. Come up to, what's this one here? Yeah, 4760 area. Okay, swing higher into this one is basically how you're going to have to weigh it. But I'd come in and actually push it up to the 48 level. That's what I did. Football player, hockey player, you have the ball. What do you want to do? I want to run with it. Why? Because I know there's nobody here. the whole time these guys have had this futures, it's been, it's against them. So now they're, you know, what are they going to do? Roll into the highs again? There you go. How many of you can remember what you did back in that Friday there, or that Thursday there in September, rolling over, right? Okay, but that's what I would do. I'd have the football and I just run and run and run and run, and then wait for the words like manipulation to come out, you know. But that's what I would do if they handed me the ball. That's what I would do, run at. I mean, but it upsets my tummy because it's really not a plan. I mean, it's a strategy, you know, go run into there, right? You know, and push. But that's they handed me the ball. That's what I would do, because I know that nobody's there. The option people, they don't want to have to deal with it down here. I mean, the calls were cheap on the flip side, you know. But the deal is if you know, we're getting down to the end zone, you know, it's like returning the punt. You know, everybody's coming at you up in here, and you're going to have all the people that realize that whatever they have, they own, whatever they want to get out of. So you will actually have physical pressure on equities. But the only thing economically that you'd have to come into in the spring would be new home sales. Is basically it. That's the cycle. We're supposed to be building new homes for roughly the next decade. But we have issues with, I guess when interest rates are 70, 90-year lows, and you know, you're having tough selling stuff, financing stuff, financing stuff. They're just not interested. That would be the horse to water, or what's that? Shakespeare, lender, buyer B, whatever. Even if it's free, nobody wants it. And I've had that happen here in Havasu when we're a tourist town, and when it hit, they were giving away 9-cent beers and 9-cent wells. No, 10 cent. Yeah, 10. I went at halftime. It was a Monday night. 10-cent dress. Yeah. And there were 23 people in a building that could hold 230. So they got 10%. But even at a dime drinks, they couldn't get anybody to come in. So I was like, wow, $1. You come down here with $1 once and now return. You know, and it was like, okay, learning something there. So it's the same type deal. Economically, we're supposed to have an upswing in housing, new home building. Demographic issues would be the baby boomers getting out of their homes. but eventually we'll convince a generation that they need a big fat home. For investment purposes or whatever, to be greedy, you're going to need a bigger home, right? I'm not going to buy the $110,000 one. I'm going to buy the, how many thousands can you add 30 grand to it? Of course, you can put a price on anything, but it's that upper end. Buy it for $239, sell it for $269. Hey, that works. Then you're into the threes. 4,800 here for, I would say, gosh, I really want to see this just, it would be fun to watch it. 3 days of the exact same thing that happened today. Boom, boom, boom. Right if you close at a support level, okay, why not close at a resistance level? Hey, 4760, what do you know? The next day, 4,800, what do you know? Woo! And then all of a sudden it gets, since I'm an analyst, then I go and read and see what they say, but then I go, like a doctor, I go and look at your chart, see if you're lying to me, but that's what I would do. Like if I had the ball and they said, Calf, you have 2 days. Where do you want to plant it? I'd love to plant it up here. Come on, I mean, think about it. You get an opportunity here to, depending upon if you can get through the supply. This is a fat supply. I mean, look at us here. This is the wimpy, the fat supply here. This is your bell curve here. So this is a very happy place. All right. So, an attraction to that, the area here, that's what I'd be aiming for, But that's the NASDAQ. And then gasoline, same thing, just a large sideways pattern. I prefer to stand aside, wait for it when this sideways is even worse. just flatlined here, week after week after week. I want it. Quietly go in there. Sugar. You're going to have a hard stop here. First gut reaction is this is going to be your first stall area. The angle of ascent I wrote about should increase immensely here. Like I said, these are weekly charts, so this is get up and go. Okay. You can see the extension here is nice extension. Yeah. You can just feel that it needs a little bit of sideways area here, but this would be the first pausing area. But like I said, the angle of ascent would increase sharply on sugar if it did clear the upper over 24. And then it basically goes insane. That would be an interesting, it'd be something also interesting to watch here. But as bulls, I'd be a little cautious here. I wanted to get in somewhere down here where it sort of corrects this longer, maybe here's 20. I talked about below 20. It's the greed thing. Oh, well, if they give it to me down here, maybe I'll, But for right now, for the bulls, close enough to put it down here for a stop, hard stop, but somewhere in this area is usually where it pauses. You can have another swing higher on the money flow here because, as you can see, it has moved higher in the past. So there may be a few other people with a football out there. Run with it, Forrest. Silver, same thing again, just like with gold. I just thought that this was ending up to be a bear flag here. I mean, then I'll look at the money flow here. No one was really interested in it at all. So it's the same thing again. There's basically nobody in it. They ran it up to here. This is nice. It pulls back. Nobody wants. So there's really no commitment to the upside. They're more worried about the risk to the downside. I mean, they puked it all up. Got it up to the upper line, puked it all up. Okay. Can this swing and go higher? Sure it can, because there's nobody in it. That's basically it. It's everybody, who's everybody kind of thing. Just they didn't want it for whatever reason, the human or the computer or whatever. They're not liking this, which is a good thing because eventually we'll find that one industry or sector where everybody wants to run into. I'm going to guess banks. If you look at Bank of America or whatever for We'll just look at all of them. Then, of course, you're saying the empire is going to die. The empire is going to die. It kind of looks that way, folks. Go grab your college textbook and open it up to banks giving you free toasters. Okay, I got that one. Banks charging you free deposits. What? You know, how does that work? You'll have less to lend, you know. All right, so here's the Russell. The Russell was the weakest of the bunch. It did peak in 2015. So here's a peak, here's a peak, here's our money flow. Just the first reaction here on the money flow is anything comes up in this way, the bodies are going to want to get out of it. Remember, we're going to roll over here too. So there's going to another round of contracts, and it's March of the following year. That's kind of an interesting deal because you put on the old marches and then you kind of rolled your tax. Oh, it was a hedge. I put it on in December, you know. But tax implications too, because it's for some it's been a good year, right? And hey, it's pretty damn awesome. If, you know, you go try and pull, you know, $300 out of gold or that kind of thing. All this kind of fun stuff. It's been a very good year. Very, very good. But you have to carry that forward, right? Oh, Kevin, can't we buy and hold? Well, in theory. Yeah, but you're an active manager. You're paying yourself to do this, right? It's a job. You're having fun. Hundreds are on fire. No, what is he talking about? No, we've all been there. Take two $100 bills, light them on fire, and keep half, of course, preferably with the seal. Then tape that to the corners of your monitor. Quadrants 1 and 2 I prefer because of the upper quadrant is buy and the lower quadrant is sell. That's what we, you know, so basically on this one here, at best for the bulls, it's sideways. Okay, we did stop halfway. Oh boy, half back on this move here. So once again, 1200 would be the resistance area. Now, what do we have? We're moving it up. All right, run, Forrest, run. 1200 would be it on the upper end for right now. Same thing, leaning to give them the ball and run with it. I mean, you know, everybody wins, right? Sure they do. The option writers. I have all these puts. Well, that's too bad. But it's going to cross. No, it's not. All right, so we're back up to the 12s and stuff. We'd fall somewhere here, right? This would be the upper area. You'd have to see a pickup in housing economically. Here's how I'd look at things going forward for the economic, but we have to get through the winter first. So, you know, next week we're going to be stuck in this area, right? So, but this is an awesome time to watch the next couple of days. Bonds. Okay, these are the ultra bonds. I'll just point them out anyway. Okay. As this comes down, this interest rate goes higher, right? Okay, so here we have, this is a pretty good reversal and then the world famous inside week. All right. If things pick up in equities, bonds should precipitously drop, right? Right? Following me on that one. Bonds should precipitously drop. This is our week. You know, like I said before, I thought equities weren't expensive, but I didn't find them cheap. But I would rather short the debt. The peaks here was the Brexit scare. Brexit. And that was it. One Brexit, one news related. I mean, if you remember the day at the top in the bonds, the bulls on the equity side are feeling that right about now. So it's the same, you know, the same type of behavior in that. So we're to here, but anything lower, interest rates are going to move at a clip. Also, the Fed has a model for their stock market too. So you can go fish it up. Someone will fish it up and point it out, you know, blah, blah, blah. you know, I just look at whatever's under the sun. For whatever reason gives you to buy or sell, that's fine. You know, be happy with that. But I just look at it as, you know, the massive short cover and rally today that's susceptible to a decent run of a few days. But bonds, you know, they come through the low here. It might not be November, December, but if it comes through, uh, it should drop precipitously. And this is at the long end. Interest rates should actually go up on the front end. VIX futures, okay, here we are. Okay, like I said, I dumped one up there, whatever. So we're back into this area. So we're back. You can just set alarms and walk this thing all the way down. What's that? 1572. I have enough here. Okay. I would be interested in buying some of the VIX products on a pullback here. Just due to the fact that I'll look at it as insurance. But as of now, in the next couple of days, I just hand me the football and I'll just run this thing. I'll do it myself, damn it. All right, so here was the close. Here's the open. All right, and it's above 50%. So this is pretty hefty. All right, but here's your money flow, and you know, if this goes above here, and we only get to here on prices, what is this in the Dow? 18.3 again. 18.250. All right, up in that area with the higher money flow in this situation here, I'd be just a little bit cautious. The old shoot the wad type of deal, where you know, they came all on board right here at the end. You know, you can set alarms under any of these. This is a nice little move here, but this is the pretty hard reversal here. All right. Basically, I just think they're going to be stuck in the sideways range here for now. There's where we're one happy place. What do you know? We're at a happy place. Poked its head through and now trading a little bit off. Open right here at the median line, or traded to the median line. Now at the next median line. In theory, go to the next one here. Time-wise, this is a 2-hour chart. Hey, look, what do you know? Now, tomorrow, though, pivots are going to be just a little bit on the extreme side here because of this movement here. So I then move and focus on the market profile, you know, like you have here, and then the next, you know, the next level up in this area. They're minor. It's not like here. This is massive, and we're at it. So this would be a logical spot to stop. Okay, and we're here. This is where Kevin would come in and go, you know what? What would happen? What do we know? We have people that bought all the way up to here and they got out. What happens if you take it higher? Where's the next stopping point? What's that? 140, we'll say. It's another 60. So here's 60 more points up into this area. Give it a shot, right? So be susceptible to more on the upside. If it doesn't happen today, that's what I would point at for tomorrow, is it move up into this area. We'll say 18,140, 18,150 area. Okay, from here, 60, 70 points more to the upside is how I'd look at it. This gap will eventually be filled, even if this isn't seen again until 2024. That's kind of how I look at it. Is just that the type of pattern that it is, the large sideways pattern. It's revisited. What is it? 67% of gaps are filled. Most of the gaps that aren't filled are in equities. VRX comes to mind. I'm sure there's a gap way up there that won't ever be filled. So that's it. Mostly in commodities, because commodities rarely go to zero. They just cycle in between large ranges over and over and over again. Oh, you silly Dow. Look, here's the money flow. Same thing. I would say that the pros are probably supporting this, buying the dip down here. If we turn on this one, the market is a lot weaker than I thought. if we turn on this today, like if we did on Friday, I don't expect the same type of behavior that we saw on Friday today. I think this one is the old gap and go, and it should continue on because there's just no money flow. There's basically no longs left. That's how I kind of look at this. And so fresh lungs can come in here. Here's regular bonds. Here's the pause. You may have bodies hiding in here. I talked about that earlier late last week, because of you have money flowing into the system for the holiday season, and that usually extra money means they have to drop the price of the money, the supply, and it's working on demand driven. But basically, I would at best for the bulls, it would be say like a shoulder, a head, and another shoulder type of deal. At best for the bears here, shoulder, head, shoulder. But I think interest rates will continue to go higher and bond prices fall lower. Same thing here. Anything below this would be precipitous, but this is on the long end. It should be on the front end, which here's corn. Great money flow for highs, high. Okay. There's a little bit of hope in there is how I read this one. So I would be interested in this case, if on any strength as a producer, to do some hedging on this. I just think I think these little peaks here are going to be gone for a little while here, and we're going to work on sideways to lower. Try to clear this out. I mean, the more that the money flow picks up and the price doesn't go anywhere, 268, 267. That would be susceptible to a lot on the downside. You have a lot of money to unload. This is pretty precipitous here, but this is a seasonal. That one was a nice one. April to J. So you have to be susceptible to a fresh low between April and July. You actually make a counter cycle. Instead of having the high in, say, the July period, you have a low come into the July period. We trade up into here, say, 20 cents higher. Money flow picks up, maybe matches. I mean, you can see that they're already in there. And then there's a sell-off into the April and July period. Okay, working hard on the lows here. All right, so you have a situation where you go into a typical peak period at the low. That would be one of those rare things. Okay. Think of natural gas at a multi-year low at the coldest day in January. That's what I'm talking about. Okay, corn. 5 years. Okay, so on the interest rate deal, it's on the front end. So in this case here, I would be looking for the fives to continue lower. This is in a large bell curve area. Interest rates didn't move much through the 30s either, but when we dropped it once, it was pretty havoc on equities. But we've mastered some financing since the 1930s. Creative ways of using debt to repatriate cash, to not pay taxes. Oh, no more tax code. I read, what did I read? 2013, 2012, 2014. I read some sort of tax code, and I swear there was a provision in there up to $10 billion for Warren Buffett to not pay taxes on the loan to Goldman Sachs. I opened it up and I'm like, what's this? I can decipher the legalese. This is exactly, but it was in there. I'm not going to go digging for it. I should have set that sheet aside though, but it was just one of those deals. Quite the interesting feat, but okay, here is, as interest rates go higher, it's the front end. So here's fives, should continue lower. And then you have 2 years. Soybean oil, see how the little guy has pretty, basically, we'll say frothy money flow, but can't seem to muster anything. So this would probably be a decent short up in here, 36.50 kind of deal. And it would be down to here. What's that? These are still weekly, right? So what do we have? We have a jab, and we came back in. Well, okay. Since it's only here, kind of deal. You can go long soybean oil and put your stop underneath here and see if this gets all what you have is you have, we'll say it's a shoulder, a head, and another shoulder. And then you're working on the neckline. It poked through, right? Okay, poked through the neckline. Usually this would be the retest. So in a sense, retested. Okay. There's not much there. I think this is $6 a tick. So you buy it, put your stop below it, and this is kind of the target I'm shooting for down here. But it's one of those where, for whatever reason, there's a railroad strike. I don't know. It just works. It's like, I don't know. Is there some sort of news that just moves markets around? Just same thing. I don't know, but the market is susceptible. To me, right now, this looks like this was a breakout of a larger inverted head and shoulders and a retest, but it's about halfway back here. So, and it's at the top of the 70%er. So if they were going to hand me the football again for risk reward ratio, I'd go long bean oil and put the stop underneath here and walk away. Just walk away. It'll take care of itself, because if it does tick up about 70 higher here, the money flow is going to pick up. It's going to get frothy. And just like you saw with, we'll say orange juice or things of that nature, commodity-wise. Let's see here, orange juice. I know that one's not on here. You get some, green bar. Okay, those are pretty hefty moves. Think of this as the stock market, but up here with a gap. green bar. Just go running, but moves like that. Boom, boom, boom. Takes off running. Okay, but you're if you're buying in here and your risk is down here, kind of thing. That's how it's not like you're buying here and putting your stop down here. These are weeklies, and this is good. You look at it and go, okay, I roll the dice, right? That's all you're doing is basically rolling the dice to see if this continues on, if it holds the breakout. In theory, if it doesn't hold the breakout, it broke through and it retested, it came up and failed, it'll drop, we'll say 200, which is, what is that, $1,200, So for something that's going to cost, $6 for a stop, there's $1,200 to the downside if this should fail. So you buy one and have a stop underneath to say sell two, that kind of thing. Of course, then you need to be on top of it because you're going to have a stop on the other side, and that begins to get confusing in people's minds. They say, what? Yes, always have some sort of stop on here. All right, here's looking at the notes here. It's feeling like a pause here. It would be an opportune time just to park your money kind of in the debt situation. If there is a cyclical type deal, or a seasonal type deal. But if any more, looking forward here, it's going to be a decent drop down here, okay, into this belly area, 126. So it's 3 points lower here on notes, okay. And this is completely ugly. Well, if this data is true, there's a whole bunch of people in soybeans. We did see that in the Swiss franc, and it did take off something fierce. Oh, you guys are killing me here. All right. I can't believe that there's any more money to move into beans. All right. This is how I'll read this. Okay. We saw this in soybeans where they ran into it here. Okay, obviously. All right. So what we have is we have a shoulder head, and we're working on another shoulder. This is usually like that, like where we're having, this is a hard short cover and rally, and then it falters, okay? We get a sideways action, basically at 50%. They accumulate. Lo and behold, what they did is they didn't give up, okay? That's why they're holding in on here. And then, of course, when they popped through here, they found some interest. Mine would be that there's so much money in here that this area, the 275 area, wouldn't hold, and you'd go below 850. That's how I'd play that on a failure here. Yeah. But on the flip side, there's a lot of obviously bullish people in soybeans. And if they get anything, a rail strike, just like with Glencore, not putting stops in their cotton trades and costing them billions of dollars, it's the same thing here. If people aren't real life poker, you have to make delivery of this stuff. You know, you can, you can buy some of this gold in my warehouse right here. Oh, sure, it's there for you. And you sell the gold 100 times over. Who's going to take delivery, right? You know, oh yeah, that's my gold. I have a receipt for it. Oh, okay. No, it's in a warehouse. If I have to sell it, I have to put it in a warehouse, and then it has to be a safe, and then I have to do this. No, yeah, this is why I don't hold physical. Here you go. I need to get some gas with this. If we come down to that, folks, we're going to be in a whole world of hurt. All right, on this one, back to the beans here. But judge, looking at the money flow, this is very susceptible to the downside, but just the pattern itself, the way this would go screaming higher for whatever reason. And all it is it's in a very tight range, but the market's structure setup is the bulls are very susceptible to a washout down here. So it could be the same thing again where beans, they end up down below 850 in July. I'll put a little alarm down there to remind Kevin. Hey, Kevin. No, it's July lows. There you go. What a good boy. Look at that. There you go. All right. And that's what I would be looking for that way, is that it doesn't, just like with natural gas, it doesn't develop. And it'll, of course, be painful for the firms if they do not unload underneath, say, like 950. $8 would be a great target for beans into early 17. But you have to watch this. I have way too many alerts, way too high, but we'll skip that. So for right now, beans would be a nice thing to watch. If you have something that you've never watched before, soybeans would be it. But decent, and it's $5,000 a dollar. So it's for every penny, it's $50, just like ES. When was the last time ES went from double that, 1,600 to 2,200? Hey, what do you know? 2013 to 2016. So this is the same type, but okay, that was a 3-year move in ES. Okay, right? This is 3 months, 6 months. 6 months, that's right. Do you want to make what it took ES 3 years to do in 6 months? Oh, thank God I don't know anything about marketing. Yeah, whoopsie. But yes, that's the whole thing with the beans. Before we had S&P futures, soybeans were and will probably always be the Rolls Royce of commodities. If you thought this was interesting, we have droughts type of thing in the United States on a regular basis, about every 3.5, 4 years. Occasionally it doesn't work out. You know, you have to wait a double cycle, which is fine. It gives you another 4 years of saving your money for that day that beans go sideways. La, 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 la. This is into harvest. No, prices don't seem to go down during harvest. La, 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 la. Breaks out. And she runs $5,000, $10,000, you know, and your margins, thousands, you know, that kind of thing. Good leverage. But this would be one to watch. I had a sneaky feeling they think this is on a weekly, huh? Well, it's all mechanical. You actually have to support them down to 970, but you could end up with a limit day. That would just be awful. Oh, soybeans, gonna have to watch soybeans here I'll have to, write that down. Sorry. Because most of you guys are speculators and you guys flip this stuff quickly, you know. So it's, I guess the average hold on the New York Stock Exchange is 4 days, which means I should start a brokerage firm. No, 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 no. Oh, you really want to pick up dimes. And then the only thing a brokerage firm is good for is knowing where the other side's at. That's basically it. Okay. Why are you that narrow here? All right. We could have an upside swing on the 2 years. It's not much, but when you're moving hundreds and thousands and billions and, in debt, basis points count. So there could be a swing up into here, which would go along with the shopping and the lower rates and the money being parked and blah, 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 yada, yada, yada. But I like the short side of things. This is a weekly, so it is kind of following the median line down here. But we landed on it. Here it hit the lower end. It hit the upper end. We came down to the middle, and we're kind of stalling here is how I look at it, is that we're stalling. And so we're probably going to get a bounce up into this area, and it's back to sideways. Okay, which does not jibe with interest rates going higher. So is that telling me something for equities? I don't know, but I just store it away, because if you're not, it's opportunity cost. If you're in debt, you're not in equities. That's just kind of how it works. Wheat, this is another one to watch. I talked about at some point setting up some sort of long accumulation pattern into wheat. Same thing again. It's a little bit longer than I'd like, but we'll just say that this has a bullish look to it, but the whole very quiet, here you have shoulder ahead, another shoulder, but same thing for wheat. If beans pick up, it's going to drag the others with, is how I kind of look at it too. In the old days, the pits were there. One pit would scream, they'd all scream. We all scream for eggs. Agriculture. So, but you kind of look at it as a shoulder ahead and another shoulder, and a swing higher on wheat. But like everything else, if corn and beans do decide to slide, wheat should join them, but not as precipitous to the downside. And that's why it's kind of I'm looking at the bigger cycle of droughts and excess, rain makes grain, and, it was a wet year, blah, 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 sour supplies, yada, yada. It's, you hear those things, and it just basically tells you, because you can't really print wheat, right? So there's a little bit of lag time. Games are played in here. It's, if things don't work out in one market, they go find a market where it works. And all of these, they do cycle from obscene highs to just farm crushing lows. And it cycles over and over and over again. So that's why I always say, find something you like, and just follow it. That's all you follow. That's all you follow. Okay, we're back to the beginning again, but I want to go look at, see if we had some follow through. If Kevin's still running with the ball. All right. How do I want to do this? We'll start there. All right. 2120. So this is the line in the sand. Would I like to see that today? That would be awesome. That would be awesome if we saw that today. Awesome. That would be awesome, 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 awesome. It would be great to sell soybean ink if anybody reads the newspaper. But that would be an awesome deal, because it sets up, it's just a whole, you're having an election at now, in theory, is a resistance level. Let's see here. Where's go back to the 2 hour. Okay. 16. Okay. And this is the old belt. Okay. This, like I said, this in this shaded area, there's 70% of the trade, okay, of the data that you see on the screen. So this is known as overhead supply. Now, we know it's not going to be futures because they all kind of came out. Okay, so you're not going to have too many longs left in there that go, I won't do that again, And now be on the wrong side on a swing up, whatever, That happens. But you also have it in the cash. Okay. Remember, a lot of this stuff does get arbed. This stuff is off by microns, it gets matched up. That's why you see the open interest bloat in SPX options and futures as it gets closer and closer to expiration. Those are all hedges. And then now we have the end of the year. So you have the whole yearly, what's your yearly look? Kevin, what do you think next year will bring? Oh, a high and a low? Oh, I get to think about that, don't I? What do we have? What do I have? What do I have? 20, what was it? 2200 and 2350. Those are just numbers. And then, of course, I have to go plug in what the mean is, whatever. Mean, median, mode, whatever. Just so I'm not too far off. Ooh, here's one. This is the price of admission right here. We're at the price of admission. Over a 100-year period, the stock market goes up 30% in 1 year, 23% of the time. So that's roughly twice a decade the stock market goes up 30%. So when I say I think the stock market's going to double, obviously 5,000 isn't so far away, or 4,750 on the S&P 500, right? So if it goes up 30% in one year, it's a good chunk. And you put two of them together in a decade, it's already almost done it on its own kind of thing. So that's just a little known fact. 30%, basically twice a decade. Oh, bodies. Okay, delivery. What did I order? Okay, so all right. So the S&P, like I said before, what do we know in the whole thing? The money wasn't in there. The money can be moved into it. I'm looking for all the resistance numbers that were sent out all the last 2 weeks are basically in play again. I also, like I mentioned in the video, it goes from S2, it could go to R2, which would be swiping the upper end here. Today's a really good day to go and decipher. You had all the the put call ratio down here. All those people I got to believe are going to be burnt. If I'm a floor guy, right, and I sold the options down here, I definitely want to help this thing go higher. And what do we know? We know that we just keep running this thing higher until we find somebody. More than likely, you're going to just stop, you stop at one level, you pull it back, you have fresh shorts, you move it higher, and they run it to the next one. You need to pull on back. And you might pull back a little bit deeper here. You find some fresh shorts, and you run it. I mean, you can, come Wednesday, there's going to be a lot of gibberish out there. I live in Arizona. It's just, it comes down to scary sometimes. What these people believe. So I just look at the chart. It just tells me, looks like it's going up to here. There's another 6-8 points higher. But for right now, I am looking for just a run with the ball. I mean, it's good to go. Only a few tacklers. What do we have? We have Friday. We have Veterans Day. So your banks are closing. Your markets are open. So you may also have one of these things too that by Wednesday, Thursday, it's, you're going to have a wide range here. This is at the lower end of the range for right now, and this is the upper end of we're working on new upper ranges here. Okay, all right. The volatility is kicking in. We're going to find an upper range, and then we're going to stall. Okay, I've seen enough markets over enough. You know how they talk about this is the 9 days in 1980 or whatever, and then we have this one's. They could come out with another statistic on the flip side, which is fine, because that's what you want. You want to get some extremes in here so you have your trading range because markets go sideways the majority of the time. So you get your ring, here's a low. I'm going to say that this low is going to hold for through this week. That's pretty much, I'm trying to shoot for my optimum kind of thing. Like I told you before, I want to see just straight up, and preferably not widespread across the market. Because if that happens, then you begin to make everybody feel rich again. Because there's stocks that have lost a third or a half, or like we saw over the weekends, 3/4 are coming back. There's still some hope. But I would prefer to see a good, decent discounting going instead of the indexes. I don't want to have to stock pick. Too much work, right? But that would be good for going forward because that would put enough scare in the system, right? All right, you want the market to go higher, you have to get some scare into the system. We got the VIX up to the 20 level. Now we work our way back down to 10, 12, 8, But, like I said, I would prefer some sort of decent pullback to help out. We'll see. How about this one? Another swing through on VIX. One more swing through it, or through the 20s. Excuse me, through the 20s. That's what I'd like to see. So on any weakness, I'd be interested. But basically, here for the next 3 days, I could throw in Friday or Thursday. Friday's usually not a volatile day. It's can be pretty muted. Plus it's a Friday, right? That kind of thing. What did we have? The holiday fell on a Saturday, I think, and they took Friday off. What was it? It was the post office. They took Friday off and stayed open Saturday. It threw me for a loop. I'm like, hold on a second. What am I missing? Yeah, I know you recognize it. It takes, okay. That probably would have helped out the economy. They'd have taken the Saturday off, right? But okay, so all right. I'm gonna say that this low is going to hold, and it'll probably hold for next week too. And then we begin to talk about Thanksgiving. That's when things can change again because we know there's enough data. There's enough data right now for the shopping. We need to, in theory, we need to start consuming. They get the retail sales, 70% of the economy. You need to buy whatever. Go buy paint. I don't know. They'll break down the sales and stuff. But this is a period that's very important to the economy. If rolling into this since summer, things didn't look too pretty on some of these charts, and the holidays don't shape up, then we'll definitely come through this one, and then we'll start working on the downside again, and then I'll probably get my wish. I'd like to just see it come back, market come back, put enough fear in there, or come off, put enough fear out there. That would be healthy for going forward, and then we start picking up on home building here. But any more on the upside here, right? You're going to start getting debt after the holiday season to actually feel its oats. And that could pick up also. So you could have, at some point, right, interest rates are going to affect the economy, and that causation, correlation, whatever you want to look at it, it's all a time thing for me. We're pretty much in this, I'm looking for one more recession within the next couple of years. Okay. That should be the bottom in oil. When we go into this recession, are we starting on one now? I don't know. We've seen some data, but there's a little bit of a lag time on there. And this could be, how about this one? 1926 in Florida, I think it was 26 in Florida. They had a hurricane, just, I have swampland to sell, all these little pithy sayings that they had years ago. They lost 60,000 homes. I'm going to assume that was a lot, in the 20s. When the Depression came, they didn't even notice. So things could be so bad right now. I mean, we have well, we do in theory have an infinite amount of money to spend, but we have a finite amount, right? So people go to work, majority of them spend all their check, and that's how the little economy moves and stuff. But things could be just so strained that even if we attempted to have a good year, it'd be a bad year. How do I explain this? We could be pulling forward sales kind of deal. We buy it now. It's the holiday season doesn't work out. There's discounting. We buy stuff. And then we don't buy it when we're supposed to buy it later. February and July are the worst retail seasons. February is because everybody gets their bill, if they get a bill. And July, quote unquote, we're all on vacation, so we lose our routine. We're stuck in cabins. We don't know anything. There are bears out there. There are bears. Just stay in the cabin. I know. So that's that. So it's crucial here that we have a decent season to keep the equity thing alive. If it doesn't develop, we even know, right? We can tell. Every week we come out with different numbers about how much money we have in our bank accounts and stuff. But this is kind of a macro cycle thing. We're beginning, we've seen some waning going on. We don't need this on top of it. But there's a regime change. 2000 comes to mind. What happened then with the stock market? 2008. What happened there with the stock market? 1980. What happened? Well, we didn't break out for a couple of years later. So, but like I said, we'll know more. I think this is fun. Run, Kevin, run. Just run this thing. But all the numbers from last week, those are going to be resistance numbers. They were mentioned on support on the way down, but resistance on the way up. What's this, 22? Yeah. Would it negate it at Kevin? Would it be negated at 2120? Yeah, we'd come back into the sideways pattern again. We'd be back into here. What caught my attention was I just didn't like this pattern coming out of here. It was a bigger dip, okay? And you have a dip here. The dips were a little more pronounced. Okay, then it's like a rubber band. You pull on it, it swings. Well, you are supposed to have this. These aren't very good patterns coming off of here. It needs to have more of a thrust. This is like waning. We talked about like a rounded top. Where is my ding-a-ling? Oh yeah, my ding-a-ling. Kev, stop it. You're going to have to pay the man some royalties. Do not do that, Kev. All right, so there we are. That was, okay, so I drew a line underneath basically today's low for reversal. Okay. Like I said, I think it's going to come into the meaty area, and it will face resistance. As we saw, you pause at one, you go through the other. I mean, right now I think it's a game, more of a setup. But, I'm looking over it for the next, it's what I think the people are going to do, like about tomorrow and then about Wednesday. All of this, there's, I talk about a relief rally. Here, it's basically just massive short covering. People were harmed here, right? It's a zero-sum game. People were harmed here, so they don't have their powder and they don't have their bias, and they're out of the equation now. Okay, but like over and over and over again, like I just do not like this setup. I do not like what I see behind. But for this market to continue higher to 2,200 and 2,350 kind of thing, it's going to have to be broad-based. I mean, we're going to, over the next, 3 months, we're going to know if Amazon's $1,000 stock or $1,200 stock. I guess you could look at that. To me, this is weekly, right? Yeah, so these are pretty healthy reversal bars here. Here's your money flow. Okay, here's your sideways, right? Something's done going sideways. Here's two ways of sideways that broke out. Kept on running. Here's the median line. So 740, what's this here? 764. Okay, so now, I'm not a huge fan of buying Amazon into any of this at all. I would be a huge fan of shorting Amazon, especially if it has this look to it, where it basically trends up, but it's taken a lot of time sideways. This kind of had it, but this was the less blow-off move. I didn't even think about trying to plug away for the holiday season in October on Amazon for a top. I kind of just kept my mouth shut. I sent out stuff. I sent out that and Facebook and Apple and all. I sent out stuff. It's one of those we just kind of, it was one of these days I sent out something to buy these Apple calls at 6 cents. And they went to $1 that day. That was a Friday. It was near Thursday close. They were at 6 cents. They opened at 6 cents. They actually traded down to 4 cents and they closed at $1. All right, and I sent it out, and I went back and looked at the volume, and I calculated it, and I realized that volume-wise at the time, there wasn't, I think it was like $6,000. Okay, so if I mail out all these things and say, hey, you need to buy these Apple calls, they're at 6, now they're trading at 4, you can only, the whole pile was $6,000. So, it's one of those where it's like, oh, I got this email an hour ago, and yeah, there wasn't enough. You have to have. That's the downside of options, is you have to have somebody down there, right? You have to have somebody giving you these things pennies off the ultimate low of 0. I'll send stuff up. Most of the stuff that's kind of far flung and wide fetched and whatever, that's to get reactions, to see what I can get. I'm reading it. That's the whole deal. I'm reading it. I just need the confirmation from someone who has I don't know. I puckered their sphincter kind of consternation. They have to fling me back, Okay, that's good to know. Good to know. I'm onto something here. I've been doing this a long time. I throw it out there, and I don't go head to head, tie to tie, whatever, with folk. That's because you don't know when people come into a conversation. But here on Amazon, if somebody said, Kev, would you rather buy Amazon or short Amazon? I would love to short Amazon. Anything over the previous highs, but I would have to say with certainty that if Amazon made a new high, the money flow wouldn't be there. What's needed probably in an Amazon right about now is a 7-to-1 split, just like Apple did, right? Let's play some games. What is it? Behavioral finance and behavioral economics. Kevin, what do you have to do to take this one orange and sell it for, you peel the orange and put it into sections and you'll get more out of it. Its value increases. It's like taking a $20 bill and, selling change, that kind of deal. All right. So that's Amazon. Let's see, take a look at Apple. Well, whose short stuff is this? Well, Apple the same way, basically in a larger. Who are you? Remove drawing. Oh, okay, but all right. So this is the weekly chart again. This is into the peaks. For Apple earnings, $14 a share or some deal, whatever it says down here. Earnings for the year. That was it. That was the money flow too. That was it. That was the last time anybody actually en masse gave a flying banana about Apple. Kevin, that's funny. Flying banana about Apple. All right. So, and then it's been all downhill since. I think Apple's jumped the shark? Hey, I wrote it last year. I think it's done for. That's usually how it goes. Just this whole pattern looks like another distribution before heading lower. Hold it. Is Apple actually down? Hold on a second here. Actually, Apple is actually below its open. Oh, fascinating. Uh-huh. Oh, that's interesting to know. Okay. Well, Facebook. Let's take a look at another one. Oh boy. Okay, here we go. So we have Facebook, basically riding the median line, or median line. And this is a decent reversal here before the earnings, and kind of ran out of flow here, right? And double topped on the money, so went higher, but double topped on the money and then rolled over. I think at best maybe 126 here. You know, that it retests this median line here and then continues lower is how I would trade Facebook here. It bounces up to about here and then comes back down. And hey, let's open it up. 1-800 the Fat Man. Anybody have any stocks they want me to look at real quick here? Yeah. Hello. Here we go. What do you know? Let's take a look here. Equities. Facebook, Apple, Twitter. What do you know? Dun, dun, dun. Oop, Twitter. Oh, now this one here. All right, this one is a nice, okay, it's a weekly pattern here. Basically, kind of looks like soybeans, doesn't it? Where it has the run miners. All right. Okay, so gold miners, yeah. What kind? Is there another miner, Cav? Metals. What are they mining for? Tungsten? Okay. All right. Okay, so we have Twitter here. Okay, so we basically can say for the bullish sense that you have like an inverted head and shoulders type of thing going on. You had the breakout, it came down. This is all news related. Okay, but this is kind of a nice swing from here. This would be follow through. Psychologically, how about this one? Twitter's going to be bought out. Not a lot of people are going to believe that, right? Not a lot. The deal with Twitter is the people go to it. I probably go to Twitter a bazillion times more than I would go to Facebook. Whatever. It's here nor there. But Twitter is just one of those things that just kind of works compared to a Facebook. You know, anything and everything is on a Twitter, and it's entertaining. It's if I was going to be on a desert island, it would be the Twitter deal because I'd be actually constantly updated, right? You know, it has a lot of going for it. The Periscope thing and everything. Twitter is a media company. Same whatever. I mentioned years ago that I thought Facebook should do the Super Bowl, and now we have football on Twitter, right? Right. So I do like the swing here. Personally, I'd do the whole long thing, but hang in there. Where are the earnings going to come from? It's there. It's however you incorporate it. It doesn't make any difference. They force everybody's background screen to be a yum. I don't know. Whatever. Hey, look, if you can value WhatsApp for billions. Kevin, what do you think the stock market's going to do tomorrow? I think WhatsApp is going to go up to 30 billion. You know, what? You know, whatever. You know, doesn't make any difference. Let's just look at the chart. But I like the swing on this one here. I think if somebody comes out and says, oh, yeah, we're going to buy them out, no one's going to believe it. It's kind of like the IPO with Google. It came out the first time, and I said, no, this isn't going to work. The psychology isn't going to work. I think it was 135. And then they brought it out at 89, and I said, this thing's going to go screaming. And that's behavioral finance. I knew Google at 135 was not going to go at the IPO. But when they dropped it down to 89 or whatever it was, 80, 85, whatever, I said, this thing is going to be red hot. And isn't that amazing, right? You go from one to another. GDX. Okay, GDX. This is the story here. I'll do it two different ways. Whoops. Up to here, Kev. All right. Oh, I'm going to have to say that this high is in for a while here. I think the metals are headed lower. I think just everything in general, it's going to have to fight. Let me switch over to my other charts here. Where is my other charts here? I can start it right here too, can I? Yeah, I think if what did I write? I think I sent something out on Friday. If gold loses 1250, it'll be cut in half. All right, that's all right, so I'm back on my other charts. This is point and figure. Okay. GDX, this is on a daily. All right. Let me take a look here. All right. The shadow over here, this is like your market profile. So this would be these are resistance areas. It's also done with percentages. Okay, I just do it percent. You know, people, oh, my stock's up 16%, whatever. I just aim for targets. You know, it's basically how hand grenades. Kevin does it by hand grenades and horseshoes. No, so they're going to be targets. Okay, so a bullish setup on these. Well, the little computer here says it's going to go to 29. You have to kind of 50-50 it, right? You have to 50-50 it of yes, the computer is right, or no, the computer is wrong. You know, that kind of thing. It's been in a downtrend. It poked through. It tried to break through this downtrend line. Okay, and point and figure charting. Adjust the price. If you only care about the price of your underline, this is the thing for you. But if you like long charts that meander forever and are hard to read and la da 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 da, put in time. There's no time here. This is just the price. So you're looking at where the hell are the years on here? Oh, you bonkers! Let's try this again. I don't have the years on here. Am I missing something? The time is missing. Okay, 6, 7, 8, 9, 10. So this is the whole year, but they're not listing the months. All right. Oh, hide months? No, I don't have the hide months checked. Okay, that's kind of goofy. All right. The 6 is for June, 7 is for July, 8 is for August, that kind of thing. So the metals peaked in August, it is a typical time. Actually, no, August is supposed to be a low. I think metals move from like October to February. But this is a counter-cyclical one here. So I think it's headed lower. Let me, where's this one here? Take a look at a bit. Somebody asked me about 26 on it. That's the top of the cloud right here. 25.90, you know, that was about the end of it. For right now, it's kind of like how I look at it. It's basically, to me, it's had a, you know, basically it's been going sideways since the peak. I suppose this is a weekly, I suppose if you really wanted to stretch, you could do a shoulder, head and shoulder again. I need to break this down for taking a look at it that way. All right, so now we break it down. So follow me on this one. You draw your little trend line. It lost the trend line. You draw the trend line the other way. We have a low, a new low. This looks like an ABC. Looks like a bear flag, and we're going to head lower on this thing. That's how I kind of read it here off of a daily. Amazing how weekly and daily are different. Like today with the, my move and my call this year was down here. This was it for me. That I liked it here. To me, the move is done. I'm done being long the metals. I'm looking. Okay, basically, if GDX takes out the 22, I'm looking for gold to go under $800. Okay, what? But I can only use what's happened in the past. Oil doubles in price. What happens? Well, it gets cut in half. Other commodity, the natural gas at a 17-year low. What do I know? Well, it goes up. It's British pound. We're still going to add more time to it, but 30-year low plus the same type of behavior before it goes up. So what do I know about gold looking back? Actually, let me do. Oh, where's that chart? Okay, here. Let me do it this way here too. MRCI, where are you? There you are. Okay, make sure you guys can see this here. Yeah, cool, rock and roll. All right, these are monthly charts, MRCI. Where's metals? Metals. Kevin, yeah, where's the metals? Currencies, hold it. Up here. All right. Okay. So, okay. Gold. Okay. Follow me on this one. All right. Here's the peak of 1980. Okay. The peak of 2011. Okay. Okay. Then you had the secondary peak. You have the secondary peak. You have the slide. You have the slide. Then you have a bounce. Then you have a bounce. Here's the bounce. So where we're at 1982, okay, is basically the same thing that I think is going to happen here. It ended up being a large sideways pattern, but we did go from 1,000 or 850 back to about, we'll say 230. Okay. All right. So here's where we're at in 1982. This is where we're at where I think today. So we will trade below this previous, which is 1,000. All right, goes below 1,800. I said 681 or something. I wanted to see what I could, but that's down in this area. You know, if you slide through here, where are you going to draw it? You're gonna draw it here. I just said, this. We'll just say this. It's just a splat. It's a goofball number. It's a splash. It's right down here. But that's where I think we're at. The same human behavior. The run up in gold here. You get the bounce. You get the bounce. Oh, Kev. Yeah, buddy. Just do it like this, man. Just do it like this, man. This. And then this. Oops. Here. Here. You get your bounce. You get your slide. You get your slide. It almost looks like it too. You can see the angle of descent change. Then you get a bounce. All right, 1982. Guess what happened in 1982? Stock market. Same thing again here too, right? Kevin was looking for 2,200, 2,400 for 2016. We broke support, came down, and we gapped up something hard. So in Kevin's eyes, it's like, oh boy, volatility means trend change. What's gonna happen? And that's just it. You play it by ear. But I am looking just using the past. That's where I think we're at. We're gonna come below this. And I think we're going to head down here. And I just said 681. Look at that, Kev. Why don't you take a picture of it too while you're at it? Hey, you know what? I think I will. Save. But that's how I'm looking at gold. Okay. Silver's a little bit different. Let's see. I have all the metals here, right? So that was gold. Let's take a picture. All right. This is silver. Silver, same thing. Holy buckets. Huge move. You can I'll draw it anyway. Silver is a little bit different. It's a greed metal. I prefer to trade silver over gold when it does this. Tell you all about that one real quick here. So I'm doing the high school thing. Waiting tables. Why not? 18 to 23 bucks an hour. Not a problem. Can I get you a water? You're in school. You're making as much as an accountant, whatever. Yeah, you learn to go to the Rodeo Drive of Minnesota and work. Follow the money. Go to where the money's at, right? So I'm working as a waiter. Guess who collects $35 in tips at lunch? This guy. So what does he do? Well, there's that break. Get off the clock. So between lunch and supper, dinner, whatever, there's a couple-hour break. I walk next door to the world's first enclosed mall kind of thing, right? Start walking around, cheesy ass, cut corner CDs. Remember, I'm in high school. Cut corner CDs and stuff. Whatever. And all of a sudden, lo and behold, you find the old. Hold it. You're selling 10-ounce bars of silver for $35. I think I'll do that every day after lunch. So that's and the fun one to this story is people would get married and people spend $50 or whatever. So I spent $35. But when you take a 10-ounce bar of silver and drop it into a bag full of cards, The best part is there's a big heavy what's in the bottom of this? 10 ounces of silver. And guess who comes back in your face and says, hey, how much is this worth? And you're just like, oh, I think I'm on to something. But that's what it is. Will silver get down and do something like this again? You betcha. You betcha it will. You betcha. No matter what, if we want to get tungsten or whatever we're mining for, whatever we need, whatever, there's always some sort of byproduct, and that byproduct is silver. All right. Same type of deal. You have your peaks. Where are we here? There's a bounce. Timeline. This is pretty tight. I'll say that this is the bounce. Hard slide down to 5. Gee, that's where it took off. Ours took off at 5, but it was more like up at 15. And that's why we stalled. But I want to point out this one. We went to 8 and then back to 5. And any way you want to draw a trend line or point and figure or anything, when it went sideways, come on, where's my pointer thing here? How about some years? Years are good, Kev. Years are great. All right. I'm on you. Okay. All the sideways. The longer the sideways, the coil, the tightening and tightening and tightening. Every day I go to work, I collect my $35. I buy a 10-ounce bar of silver. Day after day, week after week, month after month, year after year. The price doesn't change. The guy, whatever. He goes out of business, though. Because pawn shops and that, they take in inventory. So that's that. So I do believe that, we will eventually, once silver loses 15, it's not a stretch to get it to go to 8. I would, I'm betting on silver seeing $8 before anything back up here again. That's just my my look at things here. All right, Mouser. Now these other ones get a little goofier besides my arrows. Where's the arrow thing? All right, here is platinum. A lot of these like this high will be in here for a while. The unwind, this is all financial. Going to banks, getting money, getting into stuff, invested in mining and everything, crash. Here's this is the hope. This is all hope. And now all of it. I mean, how about this one? People say, well, Kev, if it costs $1,000 an ounce to get out of the ground, why would they be selling it for 900? It's kind of like, well, you bought a new car for 40,000. Why would you sell it for 30? Basically the same principle. There's a speculation demand, and then there's an industrial demand. Obviously, at the previous peak, it found support. So right now, 800's it, plus or minus for down the road. Once palladium goes below $800, it's going to end up doing a long accumulation phase again. And what do we have between now and the end of the 2020s until the cycle picks up again? If the 1980 was the peak and the 2011 was the peak, that's 31 years, right? 31 years or 21 years? 31 years. Where am I at? 80, 20, 31 years. 30, we'll say 30 years. So what's 30 years after 10? The next peak is in 2040 then, right? Hey, you're never going to believe this. Holy buckets. Wait till I shed some light on this with you. There's a real estate cycle that's due in 2040. Wow. So, Kevin, you're going to tell me that this real estate cycle in 2005 is also going to coincide with the real estate cycle peak of 2040? You betcha! So, in the meantime, you have a whole bunch of time to start accumulating your precious metals, but I would do so at a lower price. Same thing here. I think we're going to see, palladium trade in the 200 to 300 range again. There was a time, now here, follow me on this one here. You have your natural inflation, okay? So here was the level all through the 80s, and they could pull it out of the ground, buy it, whatever, and it worked. Then we had the takeoff, and it came back. Oh, this was an interesting move. Okay, this was I'll have to go and read up about this with palladium, but I think was this, I'll have to read up. I can't remember if this was, we've done the fission, fusion, whatever, cold fusion a few times. I remember back in the 80s, we tried to get the thing to take off, but I'm going to have to read up about the palladium deal here. Because it's one of those things that if it's thin or whatever, if I don't like it, I mean, it's like, oh, I have to take on another market to follow. But this was a very interesting move here. I have a sneaky feeling somebody didn't do the right thing. Look how fast it comes back. Yeah, obviously somebody got pinched because it came all the way back to the happy level. So okay, so from the 50s to the 60s, we had prices move up and they stayed there. We stopped seeing 20-cent wheat. Okay, stuck at $1, then $2, that kind of deal. So you have a period here, the irregular inflation, and the new reality here of this sideways pattern. I assume that it's going to fall back into here. I don't know if it's going to come down to $150 an ounce. If it is, I'll go get me some bars. Why not? What the hell? I mean, if somebody can screw up here, so maybe there's somebody that was a baby that's going to get into the metal business in 20 years or 30 years, and this little thing will be off the chart. It was like a long-term capital management. They just didn't include the 1987 crash into their model. But hey, when you have 2 Nobel laureates, right? They know their shit. You don't even use the black swan or the outlier. What? But hey, that's what they did. So, all of a sudden this will come off the chart, And let's go back to the copper deal here. Some of you are in copper. Okay, so here we have, Dr. Copper. Yeah, a lot of good that's done. You know what the expansion was like in the 80s and 90s? Copper didn't go anywhere. This was your Chinese consumption and also a secular move in commodities. And we came all the way down to here on the unwind. We did that with oil. We got to 36, but eventually got to 28. So here I'll say that we will at least see $1.50 copper down here. This is waves in the ocean. Cycle, big cycle. You could say that this is one from the 70s, 80s, and 90s, that this is one large sideways pattern. And when it broke out, it didn't look back. The unwind was painful. It stalled here. So at $1.50, the users of copper are very interested in it. So the magnet here for me is not $4 on copper. The magnet for me is actually, and I'd like to see it get back to the median here at $1. I won't push my luck. My target is I'm looking for the pullback down to the $1.50 area. I can $3 for, you can draw a line across at $3. That's fine too. I mean, you can just kind of, this is the gallows kind of thing. I kind of erase this from my memory, just due to the fact that it screws up my charts. But I just, you look at it, possibly head and shoulders again, and the rollover. This is the neckline. This is just unfortunate unwinding of a manufactured bubble. The cycles here, let's see. If we don't want to, 1987 was the peak in real estate for this cycle. 1996, Orange County filed for bankruptcy, and here's your .com. No one gave 2 shakes about copper, right? 2 diodes. Nobody gave 2 diodes. Oh God, he's such a funny guy. All right. Medication. Okay, so no one gave 2 because they were all in the .com. You get on the .com, right? Well, the .com didn't work. You're already in your home. It's been a decade, right? You're not thinking about real estate, but even though that was the cycle again, because there was 5 years left of the 18-year cycle in real estate, and that was the swing. When I got here in 2000, the people were jumping up and down. It was the commodity cycle. We took the money out of the NASDAQ and put it into commodities. We also did the housing, and it also timed with the bulge of the baby boomers buying their second plus home. And guess what happens? That's it. The baby boomers, they did everything we asked of them and more. But, let's think about their usefulness. Drug stocks. Well, let's talk to those folks. Do they really want to be taking 30 pills so you can collect a dividend? Well, some of us would say yes. And those are the ones that need the pills. But that's not here nor there or whatever. You didn't pay for my shtick. All right, so that's the copper deal on here. That's, I guess, here. Why don't we do this while we're at it with these big guys here? All monthly charts. No way, Kevin. Are you giving us a secret? Shh. Did I say free? Try to do this so you guys can, this looks ugly. Who wants to go along the stock market? All right. So this is a non-logged chart. So it'll be okay. It helps in little moves like this. All right. Follow me on this one. The whole Elliott wave deal. We'll assume it, right? We'll just assume we know what we're talking about. It's a real science or whatever. All right. Typically, this type of stuff is like your 4-wave, right? This is a massive 4-wave. Basically, stocks really didn't go anywhere for a while because we were too busy playing commodities. Somebody has to buy this stuff. And they did. They bought the miners and the oils, and they bought commodity-related stuff. Tech, just ask the people who had Microsoft during this 15-year period of dead money, basically. All right. So here we are. Okay, so if this is a wave 4, this should be your wave 5, right? Now you can say 1, 2, and this is a long 3, and this is your 4, and this is your 5. Follow me on this one. All right. What happens if it is the end of it, right? We have the baby boomers. We're not making enough babies in America. Growth, you can't sell anything if they can't eat it, consume it, that kind of thing. We don't know what's it's going to be like going forward on the planet. But we may be at that part where America has jumped the shark itself. We used to be 1/3 of the world's GDP. Now we're 19%. We're not really leaving the labor, the workers of this country with much to talk about unless they put it on credit cards. As my doctor friend says, too many people, not enough toilets. So I kind of look at this as I have to go, okay, Kevin, what happens if this is the end of the empire? Just like the sun never set on the British Empire. That America just is 10,000 people a day go on Social Security, but we only find 3,000 jobs. How does that work? It's digits and dollars. It's no big money is really no big deal. It's just a medium to get from one thing to another. But we pretty much do poke that into your head though as a young, go get the money, which basically means come and work for me for cheap, But getting back on track here. All right. So it's the big picture. All right. In theory, it's going to have to hold that 15, 16 level on this S&P, right? Okay. And any type of theory, this was resistance. You have to throw this out here. You have to throw this out here. Okay. Like I said, here was the 1800. We go up. We're just, it just looks like it's strained here. I will take, you know what? I will take sideways at 2000 for a decade. Okay, because interest rates are awful. Think like the 70s. Interest rates are awful. They only keep going up because they're just adjusting to whatever. There's too much money in the system. How about that one? We actually have to raise rates to get the money out of the system, and no one wants to put the money into the bank because every day the rates go up. So there's a game to play. They talk about with deflation and disinflation, where people wait to buy stuff later because the price goes down. What? No. The people don't sit on the couch and go, if that boat I think is going to go down $100 next week, it doesn't work that way. The closest thing you can actually time is buying gasoline, or meats or whatever at the grocery store. But you know what I'm saying. So it pokes its head through here as the breakout. Doesn't hold it. It comes back down. We're trying something interesting today. They handed Kevin the football, and he's running with it. He's going to run for a couple more days just to see. Woohoo! But it really is not holding the breakout above here, right? The previous highs, what's that, 2134? So 2134, we're not there. We're in the, it's short it and put your stop above the all-time high, or and reverse there. That's the easiest way to say. Short, short one, buy two kind of deal. Catch my drift? So if you're wrong, you reverse and you're long, and you collect 2200, 2350, whatever. Okay. But on the downside, if this stuff doesn't hold, we're headed back down to this. In the whole big scheme of things, I just got done saying we make X amount of jobs per month, but 10,000 people a day go on Social Security. We're past some sort of tipping point. We've already said down the road quietly we're going to have to cut everybody's Social Security 23%. That's going to be interesting. But I've paid in. Oh, you thought angry white guys on the couch with guns now, or well, wait for the next generation to come through. They'll probably actually figure it out, because that other generation will be gone. We'll have to figure it out ourselves. We don't want to lose a quarter of our Social Security. But what I think what's going to happen there is there's going to be just so much wealth transferred from the baby boomers to their children. A house. When was the last time anybody had a scratch off and hit 100,000 on a house, 200,000 on a house, 300,000? Every one of your little kids are gonna, run around and just $1,000 or $100,000, 200,000, just the house alone. Whatever, food, water, shelter. You can sell your food, you can sell your water, you have your shelter. It's going to work out indiscriminately. Trillions of dollars are going to go flying out from wealth transfer going forward, that they probably won't give two shakes about their Social Security. Some of that money is going to end up paying off student debt, which is fine. That'll help hold back the inflation. But managing, centrally planning, managing baby boomers growing up is pretty simple. Hey, they have to be a certain age to get into these grades. And some of these schools you're going to have to build, you can forecast forward. You throw in Kramer versus Kramer, and divorces go bonkers, and now you need twice as many beds, twice as many homes, twice as many apartments, twice as many, that kind of thing. That can be unforeseen, that kind of deal. But when you get to the end game with the death and stuff, that really, you can't really plan that one. So the government, I think, or the Federal Reserve, I think what's going to happen when you have all this wealth transfer, they will have no choice but to jack up rates, even if the economy is stagnant, because they're going to have to try and pull the money out of the system. We're basically flooding the money, but it's not really splashing around like it should. We keep doing all the wrong stuff again, it's like building skyscrapers that are half filled or whatever. We do have some ingenious ideas out there. I'm not too keen of, all these drones flying around overhead. You just know that they're going to fall down and blah, blah, the liability, whatever. But, times be a change, and they always change. They always stay the same or whatever. But going forward though is I just think that we're going to have lots of inflation because of the transfer of that wealth. Okay. Inflation is good for equities only after coming off an inflationary period, because prices all bid up. Everybody has to work so hard to get a tank of gas and a carton of cigarettes and blah, blah, blah. But then gas falls. So you have this extra money. Well, maybe you'll buy a home. And that's how the economists kind of look at stuff. But I'm looking at this as, okay, you have your baby boomers, and you've had a pretty good March, and you just try so darn hard. We saw, I posted the charts of what Amsterdam and some of these European ones. They peaked in 2000, and it's been downhill since. They can't, that may be what we're in for too. All of a sudden we just fall back on ourselves. We try. I mean, some of these stocks, honestly, $10 to $100+, and nothing's stayed the same. You bought back your stock. I mean, it's almost like a carnival out there now, right? With the Barkers and the shills, and I mean, it's not, the VCs bringing the companies, the IPO at fully priced. I mean, it doesn't help when these things crater. GoPro reminds me of like Palm and stuff. They open the IPOs at the high and they go down. That doesn't do anything but set stuff back for another decade, 5 years, a decade. till we get a whole new generation of 18-year-olds that think they know what they're thinking about, you know, and then you fleece them because we've been to this rodeo before. But my biggest fear, like I stated before, is that if we take out this 1800, okay, on the S, which, holy cow, Kevin, was only the beginning part of this year that we were there, and we get to the 1500, go, oh, okay, it's a retest. We had a pretty good, that would be it. I would, for the love of my country and the people on earth, I too would come in here and plug away no matter what at this. But if the 1600 is lost, in theory, then we blast through the other side. We're talking, you thought 666 was an interesting one. Here's where the Chinese got on board the World Trade Organization. Okay, they came on board. We figured that the next country that we can do this to would be India. You know, we kind of modernize India per se, you know, and that's good for decades, basically how it works. But we're running out of countries that we can do that to, right? Because everything's kind of, it's like airline tickets and stuff. Anybody can fly. There are new countries every day that I've never heard of, and they have an airline. But like I said, my biggest concern is that empires do die off after, what is it, 150 to 400 years, things, and it just maxes out. I mean, we don't, 84% of us are service industry, or as basically BS. Now we have the cloud. Now we don't even, it checks in the mail. Now how do you tell people how to value something they can't see, like Bitcoin? That maybe Bitcoin is a good thing for everything in general. There's no value in Bitcoin. It doesn't even exist. There's nothing there. I mean, how do you bring it into a courtroom? See, Your Honor, I'm representing the Bitcoin. It's sitting over here in the corner. Woo! What was that? There was a fable, I think, where the king runs around nude or something, right? Yeah, whatever. Naked, nude, whatever. All right, what I'm going to do is we're pretty much into the game here. Let's see. That, like I said, the biggest thing I worry about is that the whole thing just falls under. There's nothing you can do. And this was the end of it. We've had a good run. We were number one, and now we're number 24 in this, number 18 in this, so it's, you can believe it and whatever, but numbers wise, we need to come up with some sort of new technologies, some sort of new idea. Because what happens is the hubris comes out and new stuff goes in. So that's why indexes perpetually go higher, because the new GM is here. The old GM that may have been away on the indexes, we have the new GM now. It's like, ugh. So that's how indexes continue to go up. The stuff comes out and the new stuff goes in. So it feeds on itself. But eventually you do reach a tipping point where that's the end of it. It just collapses on itself. I mean, take a look at ZERP and NERP. You're not going to tell me that we definitely have some serious issues out there. We're handing out free money, nobody wants it. Kind of like the 10-cent drafts and the 10-cent wells at that bar. Even at a dime, nobody wants it. So, like I said, my biggest concern is that, if we do lose 1800 and you try and hold the 16 in this kind of, and it doesn't hold, that we collapse even further. Remember the Great Depression was 89% off. We have computers today. We don't have the leverage that they had. They had 10-to-1 leverage. We have, well, the off-exchange stuff can get kind of interesting, but stuff blows up and whatever, all the time. But at some point, it's just too much, At one time, we thought that the debt in the 80s was going to be an issue. Now look at it, But I'll run through these real quick. Same thing, Dow. These legs look awfully sick. This one just looks like just an overall double top in general. That's an ugly looking chart. Dow Transports, hard sell off. This basically looks like a 50% bounce. Not too much of an interest there, though I wouldn't buy the dips on it though. If the economy, I believe, is going to continue higher. Here we go, the Dow Jones Utilities. I remember it's a down-log chart, but like I was mentioning before, that this could be a high that's in for a long period of time, because people were chasing after it, not because it was a yield, or they went after it because it was yield, or not because of the underlying strength. The Nikkei, here was the peak in 89, not much action since then. Think of America the same way. What's, Japan's number 2 kind of thing, Germany number 1, that, America, it can happen. It's obviously the DAX, the same thing. This kind of looks like a bear flag heading lower. Same deal. I have to hold 8,000 on the DAX. If not, cut it down again for whatever reason. I don't know. It doesn't make any difference. We'll say inflation. I'm right. Baby boomers start transferring wealth globally. Whatever. We have massive inflation. NASDAQ 100. You could say it's a double top. This is on its own. I mean, you can compare it note for note kind of thing, but it's on its own. You can see, though, how the NASDAQ is kind of a little better shape here. It was able to support itself coming through, but it's basically stuck in a sideways range for right now, because it broke out and came in, so it's stuck into here unless it continues higher. In theory, though, like I said, if it pops through, it usually comes through the other end. I give you hope, NASDAQ, that you can pull it out. The Russell, the weaker top, peak the previous. It needs to, at this 50, this one definitely needs to have, this would be, if the bulls want to try and regain it, this would be an optimum time on the Russell. Same thing, I think, with the NASDAQ, 4,500, yeah, somewhere in that. If the bulls can, for on these are, monthly charts. Here we go. This one is Australia. I think if you just draw a trend line on here, this pattern still looks like what oil did, and where it bounced up and sideways for a while. I think it's going to roll over. Now I'm thinking to myself, we're going to get a depression coming. All right, volatility. This is a rough chart, but just gives you little outliers in the past. 1987. Here and here, this was Russia defaulting, got up to 60. This is your long-term capital management, your Asian contagion into the 50s, over 80 here, 90, excuse me. And here we're with the little blip. So like I said, you can draw a trend line down here. I basically just look at it, for the pros, you just look for the extremes and then go against it. I like it when it comes down here. It tells me more than what I need to know that the market's complacent, and then you just basically look for new highs and buy the puts. Is basically how you look at it. Because who's going to buy puts when you're at new highs? Bonds, obviously, this is marching down something fierce here. If you look at just draw a trend line through the center of this. 140 on bonds, so another 20 handles down to here. For whatever reason, 10-year notes, same thing. You just draw a trend line underneath. Looks like it's coming down. Here's 120 area. Another 10 handles lower. I cannot see him going higher. No, it's 5-year. This looks like a distribution pattern before headed lower. And you can just look at the trend lines. Euro dollars, this is 94 is where I think it's heading, which is the front end would be 6%. Okay, here's 96, that'd be 4% on the front end. And we're working on 1%. You can do it, Kev. Where are we at? Oh, look, 0.95. I think, where's it? Close point, yeah. We're working on it. We only have to raise interest rates another 500%, and then I'd be happy. 500%? Yeah. All right. Gold, so we looked at that. Same thing, just coming on down. Silver, we looked at platinum, palladium, copper, same thing. Swiss franc, like the short side of this, it's off kilter. Just insanity here with the Swiss franc. 80 handle is what I'd shoot for on the Swiss franc, 80. So I'd aim for euro. This looks like a wave 4 continuation lower. Yep, lower. That's how I look at it. 120 should be a ceiling for at least a decade here. It's going to be a while. 120. Japanese yen. Okay, so this is 80.95. That was that peak, and I peak here. Here's where it bounced. Resistance, resistance, oh, resistance. Okay, so, but this is the yen. So as this goes higher, the U.S. yen goes lower. So as you can tell, I kind of want the yen to go back to 80, which would be 120-ish on your. We're basically stuck in a range. Hey, what a hell of a range to be in. That's at 10 times your money. I'll definitely take a decade of between 80 and 100. 10 times your money every couple of years kind of thing. Well, this one was pretty quick here, though. That's what they usually are. Nothing gradual, just boom, 10 times your money in 6 months. All right, British pound, I like it. This is an area that stopped the 120 before. We're bouncing. Same thing, right? Comes off the ERM, bounces up. Same thing again. Here was the hard slide. Here's 140 to 170. A few years later, it's over 2. So this is bad news. Okay. Oh, this is terrible. Okay. Oh, this is bad news. Okay. Even here was what? 140, 170, Same thing again. Get it back up at 160. I'll take 160. 140 to 160, I'll take it on the pound. Canadian dollar, there's a large sideways here. Large sideways for right now. Choppy either way between 70 and 80 with oil. Just a lot of sideways. Here's all the 80s. This was the only good move we did, right into the Gulf War, and then it slid. Uh-oh. All right, Australian dollar, lots of sideways to down on the Australian dollar. Mexican peso, obviously you can see that we're having a reversal setting up here. When you talk about something that's prolonged like this, it's getting to be time. Oh, they fixed that chart. That one was sideways before. Oh, bless them. U.S. dollar looks like a swing through 100. Then I was looking at 103. Here was Clinton high, 120 under Reagan, which is off the screen now. Ouch, was 164. Oh, Gazawi. I know history. Wow. I'm going to need yearly charts. Oh, in the next 12 years. Can you imagine me saying that to an 18-year-old with $5,000? Oh, yeah. Well, when do you think this is going to happen? In 12 years. No, I'll tell him 1,000 times his money. 1,000 times his money in 12 years. And see what happens. 1,000 times my money. You'll get a calculator. Damn kids today. All right, U.S. dollar index. Buy the dips. Oil. Look at here. All through the 80s and 90s. When I talk about dead money, you're looking at it. Find a line. Here's a line. We'll use 20, but we'll make it 40. Here's 40 high. That was the Gulf War. Here's 40. Plus or minus 40, just like the 20s. Plus or minus, same thing. We'll say at the 40s. I'm happy with $40 oil. I'll call that a new low. A new long-term low just like this. Brent. Here's through the 90s. I'd say Brent maybe a little more in the 30s. I'll go back to this one here. No, I think America is more towards the 40s and Brent would be towards the 30s here. Yeah, we'll see as it goes on. Kind of not interested. I'm looking for, I don't mind flipping back and forth all day long, but I definitely want to find something else to do. Gasoline, yeah, these are going to be long sideways patterns for a long time. This one has some more to come down. Gasoline, same thing. Yeah, a lot of sideways for a while. Natty gas. Hey, look at all this here. Ooh, does this look familiar? 380, $2. 440 or some, $2. $4, $3.90, $2. Okay, $6 down to here. $3, $2. Don't put it past you. Don't like it. Just hang in there. Cattle business. That high is going to be in for a long time. Feeder cattle, long time. And judging by the damage cows do, I think I would prefer the Amazon rainforest versus a ribeye I read about now. That's here nor there. Hogs at the low end of the thing here. If I was a producer guy, this is where I'd be looking to kind of get into the business. But we're only talking, you're making 30, 40 cents. I'd leave it to somebody else. Milk. Ooh, milk moved up. I wonder what that is saying here. I don't trade milk, but it's just interesting to watch. Oh, that was a pretty good reversal here. Oh, I guess we did get down to that. We talked about that this year, didn't we? Yeah, milk. Okay, 13, 17. All right. I'll say it's stuck in a range here. Hedgers hedge. Do I think you get 18, save part of, save a third of your, and hedge or something. Soybeans, see, we were talking about that before here. Ooh, this is gorgeous. Soybeans, waves in the ocean, El Nino and La Nina. No kidding, folks. This is what turned me on. This is when I was turned on to cycles during this period in soybeans. Not this one yet. I went to the grain exchange in 1987. All right, so these were the cycles as a floor trader at age 19. So these cycle with El Nino and La Nina. Same thing. We'll call this hedge fund abuse. And here's where we are. So we're at the upward thing here, but you can see that it has a tendency of coming back. And I don't think the guys along those beans have an idea about $6 and $8 here. But we will watch them, won't we? Soybean meal. Basically getting back to an area again too. Cycle. I'd like to see it come down below 250. Like all of these to come and reset down of these longer swings and go higher. Reset up for a real bull market, like some of these here, and not these fake ones. These financially engineered bull markets. Wheat, so you can see when I was saying, hey, under $4, I'd be interested in establishing and watching like natural gas some sort of position. $5,000 on $2,000. What is that? Seven times, 8 times, your money type of deal, like we saw in beans in months. Same thing. You sit there, we'll say 10 times your money, whatever, because you get it on the way down too, right? Well, it's this one, $3. We'll say, where's a breakout? We'll say 5. Yeah, 5 to 7 is 10 grand. It's 5 times your money here, just in this part. Even if you just take the breakout to the previous high, 5 times your money. But can you sit for a couple of years watching this thing, basically trying to accumulate here on the dips for this, that's basically what I'm looking for. This was a story I'll tell sometime too. That's a good story. Minneapolis wheat coming back into an area. So the wheats I'm interested in. Oh, it's same thing. Just watching it. Rice I'll skip. 3/4 of the planet eats rice daily. Canola. Orange juice. Short. It would be amazing if we had a Florida freeze kind of thing, but the orange juice deal, it's obviously this goes back to the 70s here with the orange juice. I'll have to look into that one. Yes, we don't live in a vacuum. Prices can go on forever, but sugar. Okay, here was the deal with the sugar. here's 1974. I believe that was a move. The Hunts and sugar. We were in silver and soybeans, I think. All right, so the hunts were in here. Here's another one. Here's another. So you can see how susceptible sugar taking off gets into one of these. Okay, and that's what I'm cautious about. You know, that it comes through one more time. It just takes off screaming in sugar. Coffee, nothing like South America. But yeah, these are some hard spikes here. $2, you can see where it kind of stalls, and then you get the whippiness. You know, the single legs up there. So coffee, just be careful. Cocoa, I think it's just going to roll over. I don't think we're going to see any of this happening in cocoa. Lumber, large sideways thin market. I'll pass. Cotton, possibly staging something here. I wouldn't put it past them, you know, that they try something here. It is at 60 is pretty much median line. You can see that, you know, it's one of those where you buy and your stops down here, depending upon what type of person you are. You're a speculator or manager, what have you. Goldman Sachs index, that just looks like it's over with, right? Dead. And that's the end of that. So what I'm going to do is I'm going to leave you guys, and I have to go run and do my little drive thing here. And then I will come back, I think tonight. I'm not sure. I'm waiting on a phone call from somebody. You know how that goes, you know. But I'm not sure. What I'm getting at is I'm not sure if I'll do this tomorrow morning or just contact you tonight, Ski. Yeah, hey man, not a problem. Well, let's take a look here once again. Yeah, I just think the gold is over with. And then what am I looking for here? Let's go back to the ES real quick. So what is this, a weekly? All right, so here's our weekly. You know, basically just put your little alarm underneath today's low, and then put another one under Friday's low for the reversal part. Like I said, if they would have handed me the football today, I would have ran with it. Okay, see, we're still working our way. Here's the pivot. These are, and remember, because of how we're moving, whoops. Oh, Kevin, put in the right thing, buddy. There we go. Look, he's still running with the football. That's right. I'm still running. Okay. So where am I at? One of these will work. All right, so here's the next level. So we're at the 2020, right? So this would be the next level that people would short at. What do I know? If it comes back through and I blast it through the 2020, my next target here is, I think it was 28 or something we looked at, then the 32. But I'm running with the ball. And just, you can get away with it. Yeah, but I think what I'd do is they're going to take me off the field. Give me a breather. Because this is, like I said before, you know, you had the put call ratio, you landed on support, yeah, the money flow wasn't there. Everybody who bought over this whole contract period has lost money and basically gave up. So there are basically no longs. So so what do you have? You don't have any selling pressure. And what else do you have on the downside? Well, you have the mechanical guys that go, well, at 21.20, it's time to go short, that kind of thing. All right, so they're short. Then when you get this, this isn't one of those, when you have something like this, you don't think about hope here, you know, and this is exactly what's happening. They're running it, you know, and people are going to stand around and go, huh? You know, and that's what it is. So, but I have to let you guys boogie, and I'll go have lunch at McDonald's or something, and have a seat and take a look at stuff this afternoon. Oh, that's right. It's 2:00 now. The market closes. Happy hour? What's this? Kevin's not making any sense, sir. He never does. But he's pretty good at it. So, all right. Yeah. Yeah. Oh. Yeah. Oh, yeah. Oops. Oh, that's right. Yeah. Where are we at? That's the one. Sorry about that, man. Bam. There we go. Look. There we go. Thanks, man. All right. The whole thing again. Once again, here's the ES real quick for you here. Uh, the whole deal, everything opened up, gapped out, and run. That's there's no, there's, like they say, there's just no obstacles. What do they call that? Price discovery. Just you're gonna know when it hits you, when the buying stops, kind of thing. So, but I'm giving it. Usually I give it 2 days, Monday, Tuesday. But since Tuesday's election, I'll give it till Wednesday for, I don't know, a relief rally, whatever we got going on today. Could you imagine what could happen if we're hanging up above? Where is it here? It's not on here, is it? No, I need to go to a 4 hour. Where are we at? Okay. Here's a money flow. Okay, what's this? This would be, all right, we're 2140. All right, I'm not going to stretch it that far today. I'll say that'll be overnight. We'll say we'll shoot for 2140 tomorrow. And then what's the upper range here? 2184. Holy buckets. Well, like I said, you can go from S2 to R2 in a hurry. And 3 days of this, hey, it's there. It's in my head. So, but I'll let you guys go, and everyone have a wonderful day. And like I said, I have to do one thing, but I gotta meet with somebody, and I don't know what time I can get there. It's like, but y'all take care, and you'll be just fine. Everyone will be just fine. If something pops up, shoot me an email too. When you guys point stuff out, I'm interested in it. So, but I'll go and find a quiet place today and go over metals and stuff. I think I need to work on that one there. I think I need to. Well, another down day tomorrow should help out the situation. So, okay, I'll leave it at that. Everyone take care. And then, what? All right. That's okay. Like I said, this is one of those things that it could go a lot higher than people anticipate, kind of thing. So just be careful. Like I said, mechanically at the 2120 area, that was our support. Now it should be quote unquote resistance. We close over it. All of a sudden now you start talking 2140 again, then 15, and then before you know it, you're at, what's this, 2180, a whole lot of laughing and pointing fingers and stuff. So just be careful there, okay? And everyone take care. That works. All right, not a problem. Because of 1968 or something, they didn't even let they started selling this thing off before the president even got in there. And that's the other thing. Ever since the Brexit vote and the bookies were off, it's one of these. I've seen it before. What's it called? Bystander effect. It's like the Kitty Genovese thing, and I've seen it on American Idol. Everybody assumes that this person's going to win, so they assume somebody else is going to call for them. And everybody has that same intention, doesn't vote. And the other person wins, not because they were better. It's because, what is it, when a good person fails to do, whatever the saying is, So it's the same thing. If we all assume the bookies, well, Hillary is going to win, blah, 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 yada, yada, yada. There's no way in hell. How illogical would it be to vote for the Donald? I talked about the popular vote and the electoral college. And did I mention the OSS? What? You mean this isn't a democracy? I won't go into it, but hold it. You mean I got the most votes and lost? Well, you'd be amazed. I mean, could you imagine on the flip side of all of this, for whatever reason, they're in their late 60s. I'm not knocking that, but when I was growing up, I was told the president who died in office every 20 years. So no, I'm not saying anything like that. But it's just, that was something that was told to me. I was like, is there something there? No. Yes, an American-made bullet didn't explode in Reagan. Oh, Kevin, stop it, you bugger. American-made bullet. I guess that's what it was, right? Wasn't it supposed to fan out or something? I don't know what it didn't. And that probably saved them. Whatever, here, there, anywhere, whatever. But those are just little things that you were told as a kid. And now you find out they're not true. So, but I'm just saying, you know, like I said, cyclically, whoever gets elected is one and out, is how I look at it. So, but everyone have yourself a good one. I got a boogie, and you enjoy Kevin coming back in the second half and run. That's what I would do, right? Until it doesn't work anymore, and then get out. So, but all right, everyone take care. Bye-bye.